afternoon. My name is Kent Scornia, President and CEO of Krilogy. I'm here with my partner, John MacArthur, our Chief Investment Officer here at Krilogy, and this is your March market perspective. Welcome, Johnny. Let's get right into it.
Let's do it.
We talk about the economy, we talk about the markets, and we're going to talk about your portfolios here in a second. Well, we've had some volatility in the markets, mainly because the Fed has cast a little bit of doubt on interest rate cuts. Unemployment's still strong, just got great readings this morning. What's your team seeing, and what are you seeing out there?
I think the economy remains resilient is the bottom line. We've seen manufacturing data show its first expansion really since 2022, which has been a nice development because that had been really the first segment of the economy to really dampen and decline post-COVID. So pickup in manufacturing, we've seen softer data out of services. And really that had been kind of the travel segment of the economy that had really remained quite resilient. So a softening there, as well as prices paid related to services, a little bit of softening has helped take a little bit of pressure off yields, although they've been collectively higher of late. But bottom line, strong economy has continued to be a tailwind, and also creating contemplation around how many rate cuts are necessary for the remainder of this year. And frankly, I think it's really less about how many or what if. It really is a function of does the economic growth trajectory remain sound and solid, which is really, I think, the key at this point in time.
Because the Fed's mandate is still keep inflation, 2.5%?
Yeah, it's 2% is their target.
Yep.
It's debatable about how anchored they are to that target, but they also have mentioned the keen awareness on jobs. And if we look at a strong jobs number today and peek under the hood, most of that work, that strong unemployment, is part-time work. So there's a little bit of nuance there that's important.
And there's one more thing that's starting to weigh on the markets a little bit, and that's the political conversation all of a sudden. And I think, we have clients, we have advisors, starting to bring up the question about election year and, what happens in election year? How do the markets respond to an election year? There's going to be a lot of emotional noise that come about. 23 elections since the S&P 500 was started, 19 out of 23 years. The markets are positive no matter who gets elected or voted into office. What are you seeing out there for you guys?
Yeah, you're right. This election year is the second best year of a cycle, a presidential cycle, following the third year last year, and we're sure seeing it so far. I think you're right in that there's going to be some anxiety and some volatility, likely around speculation of election outcomes. Frankly, to your point, I think it's noise. I mean, let's face it, we're up, the S&P's up almost 30%, almost in a straight line since October. And so pick your excuse, we're due for some corrective moves of some variety here. Again, plenty of things to point to. We've got some turmoil once again in the Middle East, or some ongoing turmoil in the Middle East. We've got pressure on rates. Short-term, long-term yields have picked up of late, which creates a little bit of anxiety in terms of looking at valuations and equities broadly. But really, if we look at prior recessions, oil has often been the catalyst to create a bunch of volatility and tempered returns for equity going forward, and we're sure seeing a lot of oil price pressure of late. That could start to concern the impact on the consumer going forward in spending.
And we spoke about in our February market perspective that, although we're not trying to predict what the market's going to do moving up or down, we could almost predict the volatility factor in the market. Yesterday it dropped off over 1%, got a good jobs number this morning, and it's popped again 200-300 points in the positive. That's the one thing we can sort of predict in the future is we do expect some volatility. The markets don't go up in a straight line. They also don't go down in a straight line. There is, the market does climb that wall of worry, layer in the fact that this is a political season and you've got a lot of emotional pieces out there. Let's talk about portfolios. Any adjustments you've been making on the portfolios as of late?
I think it's some rebalancing around the edges. We've talked in the last several months the importance of looking beyond just tech. We're really seeing that. Liz Ann Saunders of Charles Schwab put out a great chart in the last day or so that showed the number of constituents in the S&P 500 that are outperforming the S&P. In the last year, it's 10%. In the last month, it's 52%. So we truly are seeing a broadening in participation in the markets. We're seeing financials, energy, industrials, materials all performing very, very well. You don't necessarily see that at the index level because of the market cap weightings dominated by large cap tech, of course. And so very quietly, you can see a shifting in leadership, which is very healthy. And it makes sense if we look back in the last couple of years, earnings growth out of large cap tech was led by price. And I think now we're seeing a normalization, and we're seeing the other sectors start to lead in price and likely are seeing a follow through in earnings.
Managing money and allocating to specific sectors is really important, but talk to us about tax planning, low basis, stock appreciation, and we've had the market run up quite, dramatically in the last 12 to 18 months. You guys spend a lot of time in with your trade team managing the tax implications of capital gains, short-term, long-term, et cetera.
We do. As our head of fixed income likes to say, it's not what you earn, it's what you keep. And so that definitely is a factor in our process to look at opportunities to either tax loss harvest. Is certainly getting outside of short-term capital gains and in the long-term capital gains window is helpful. But just being mindful overall about portfolio construction and management and the tax sensitivity piece to that is important. Municipal bonds, for example, as yields have picked up once again, there are opportunities in the municipal bond market. And in markets in general, one of our key emphasis points of late is encouraging investors to think beyond the safeness and security of money market funds. Just even lengthening duration out into short duration active strategies can make a tremendous amount of sense, because the beautiful thing about this backdrop is that the Fed is done. There's a whole bunch of speculation of how many cuts and when, and that all matters at some level, but the fact that they're done in looking at inflation and jobs as their dual mandate is it's important to start to capture some of what this higher rate environment has brought about in terms of opportunity.
And the dynamic has changed with this higher rate environment. 5 years ago, there was no rates. We were at zero effectively. Now we actually can play in a game of interest rate change, and it creates opportunities for you as a portfolio manager to take advantage of those for our clients.
That's exactly right.
My final thought today is this. We are entering into, April and beyond, going into summer, going into fall. We've got backdrop of political, emotions that will come up. We're going to go through a political season. We've got geopolitical things happening across the globe. It can create and feel like a lot of stress. The one thing I would say, and the one thing, the advice I would give people is try not to transpose your political beliefs onto your portfolio. It is detrimental to the returns of the portfolio. I mentioned it earlier. Markets tend to go up 83% of the time on election years. I've witnessed it before where clients have come to us and said, my candidate did not win. I'm going to make this drastic change to a portfolio. And each and every time it has hurt the returns in the long run. So keep in mind, great fundamentals inside your portfolio are really important at this time. And as always, please contact your Krilogy Wealth Advisor for any additional conversation and analysis on your portfolio. For John MacArthur, I'm Ken Scornia. I wish you the very best. Have a great day.